Past performance is no guarantee of future results. Content is offered for information purposes only. Unless stated otherwise, any and all individuals participating in the video are third parties that include both professional investors and individual investors who may not be licensed or certified by any institute or regulatory body. Unless stated otherwise, the views or opinions expressed may not reflect those of Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank. Hey everyone, Daniel Snyder. Welcome back to another episode of ETF Spotlight. Today we're diving into the world of crypto, but not in the traditional sense. We have Anthony Georgiades here, founder and general partner of Innovating Capital, to talk about crypto going on balance sheets of individual companies as well as sovereign funds, what it means for them, what it means for volatility. So let's dive into the conversation with him. Anthony, thank you so much for taking the time. Wanted to kind of just start with a high level approach, right? I was looking at the crypto world this morning. Bitcoin, for example, in the last month has only moved about 21 basis points. It's really, I don't know if it's a basing pattern, if it's a distribution pattern, what this might be, but what's going on in the world of crypto and how are you thinking about things right now?
Yeah, it's pretty exciting. You obviously touched on a few things. We're seeing a pretty interesting evolution in the world of treasury management. Obviously, we had early movers like MicroStrategy and Tesla that really showed that, Bitcoin or Dogecoin or whatever it might be could be treated as a long-term treasury reserve assets. Corporations now are starting to see Bitcoin as really a hedge against both dollar debasement and inflation, but more importantly, probably more so a high beta balance sheet enhancer, especially if they want to signal innovation. We're seeing obviously DATs after DATs popping up left and right. And this is important too, because you kind of overlay that with the fact that there's a mandate now across, whether it's a sovereign fund, an endowment, institutions, whatever it might be, to target a certain amount of allocation to crypto, upwards in some instances of more than 5%. But in order to do that, you have to onboard to qualified custodians. You have to be able to, bring on certain service providers and things like that. And they're finding that there's a very easy pathway to get exposure to crypto by way of these digital asset treasuries or these corporations that have a tremendous amount of exposure to crypto on their balance sheet. And in doing so, you can acquire a public equity that's listed on the NYSE or the NASDAQ or whatever it might be. You're already registered and qualified to hold those types of securities. You don't necessarily need to go think about how I'm going to acquire Bitcoin, some of the execution risks that might go into that. Who's going to make the transactions for me? I can acquire this underlying equity and still get the beta exposure and that kind of idiosyncratic exposure of crypto in more of a different form. So it's a much easier on-ramp and gateway. And I wouldn't nuance it with the fact that people are looking at these stats very much so kind of SPAC-ish, but I actually view these as being a long-term systematic mover in the broader digital asset realm, which is providing for a tremendous amount of broader momentum. One thing that doesn't really get talked about too much is that each of these digital asset treasuries that really pops up has to have a very tight mandated treasury management policy in place. The pipe goes in, puts cash on the balance sheet of a public company. That public company turns around and goes and buys the underlying spot crypto or digital asset and then holds it. They need to be creative and obviously generate alpha somehow. So it's certainly creating a lot of efficiencies within the broader crypto realm in terms of how foundations are thinking about their own treasury management policies moving forward. So it's very exciting in that respect as well.
So Anthony, I want to ask you though. So you mentioned Dogecoin, you mentioned Bitcoin, but there's so many different cryptocurrencies out there. So when these companies are going, or these sovereign funds or whoever is going to look at which crypto to put on their balance sheet up to that, or maybe even exceeding that 5% allocation part of the portfolio, how are they determining if it's Bitcoin, if it's Ethereum, if it's Solana or Dogecoin, like you mentioned? How are they approaching that, and which one should they be focusing on in your opinion?
Each of these serve a really different use case, right? If you want exposure to obviously Bitcoin in the world of digital gold, digital commodities, or whatever it might be, on that side of it. Obviously, Bitcoin is a perfect, avenue. If you're a multi-trillion-dollar institution, you're kind of limited as well to Bitcoin or potentially even ETH, right? But Bitcoin is a very clean narrative, finite supply, longest history, highest decentralization. In fact, really the only sufficiently decentralized asset. It looks like gold 2.0. It's the deepest market. It has the most liquid trading pairs. It has the most developed custody and compliance infrastructure. So if you're a risk-averse allocator, you really start there. Then, ETH is really the kind of second key point here. ETH is less about being a reserve asset. It's more about Internet of Value, Web3 economies, and it underpins, DeFi, smart contracts, even NFTs, right? Then you have the cash flow argument that's tied to it. Since obviously the merge and change to proof of stake, ETH has become yield bearing. You have staking rewards, right? And some treasurers and funds like it because it feels closer or more akin to an equity style asset where you're generating kind of a dividend or distribution and whatnot. With Ethereum spot ETFs being approved, it's becoming kind of like some people are calling it the silver to Bitcoin gold and institution portfolios.
So I wanted to ask you about, we're going to transition here to ETFs, but not only individual stocks. So I'm looking at the list here of stocks that have crypto on their balance sheets. It's the names like MicroStrategy, which you mentioned, Tesla, Block, Coinbase Global, and then you got ones like GameStop. So these names are more meme. They're abstract. They're maybe retail focused in a sense about the awareness of these individual tickers. Why do you think we haven't seen companies like the, industrial players like General Electric or the ones like Home Depot or Walmart or any of these legendary, American brands? Why aren't they all transitioning quicker to putting all of this crypto on their balance sheet as well?
Listen, I actually think the transition's happening pretty quick. There's obviously in these types of corporations, especially, your Fortune 500 publicly traded entities, to take really the domain expertise of Home Depot going out and acquiring, crypto is very, very, I would say it's a new realm, right? You have accounting issues, you have volatility, you have risk committees, things like that. Tesla, GameStop, the companies you mentioned, GameStop, probably more akin to a digital asset treasury in a way because of the fact that, the underlying, equity value of GameStop on a standalone basis was, very much so underwater and highly impaired. Acquiring crypto was basically kind of a way out. It wasn't necessarily a true shell, but a shell nonetheless in some respect. But, first and foremost, there's the very specific points. Under current US GAAP, crypto is still treated as an intangible asset, right? This is an issue, obviously, for companies like Home Depot and whatnot.
Let's talk about that a second. So the volatility aspect, the hedging risk and all of that stuff. So that leads kind of into the ETF wrappers. We saw this whole thing about ETFs being created recently, and there's so many of them now to the point where some of them even offered 0% expense ratios when they were launched. The benefit of the ETFs and them having Bitcoin within an ETF, what has that unlocked for these financial, or for the financial side of these companies?
Like with respect to the wrappers in general, or just in terms of, volatility in context?
Let's go with both. Yeah. How is it benefiting them instead of having to go out and buy direct crypto?
Well, ETF wrappers, it's at its core simplicity of access. Anyone with a brokerage account can go buy Bitcoin exposure without learning custody, wallets, private keys. So it's just lower adoption for retail, for IRAs, for pensions, for corporate treasurers, right? Those are huge parts, especially if you have a book of clients that's demanding exposure and they're thinking about moving capital away and an RIA hasn't been able to figure out how to custody crypto. Obviously, there's institutional plumbing as well, right? It just plugs right into existing ecosystems, portfolio rebalancers, compliance screens, tax reporting, custodians. And then there's really the fee compression you kind of alluded to, zero expense ratios. You're seeing a kind of race to the bottom, 0% expense ratio ETFs, at least for some, promo window or whatever. And that unlocks this kind of concept of crypto exposure as a pure costless allocation. If you're an institution, you already have these razor thin hurdles, right? It's basically, basis point after basis point grinding it out. So costless allocation is huge. That didn't exist in Bitcoin before, where I needed to pay a custody provider. I needed to go pay Bitco or whatever it might be. And they're charging, bips that would just kill my bottom line. It might seem small to you and me in the, alternative asset world, but for these multi-trillion-dollar institutions, every bit matters.
So let's look at, IBIT, for example, the iShares Bitcoin Trust ETF, which has over $88 billion of assets under management. I mean, this has been the winner since these all launched and got the approval from the SEC. Do you see that maybe this is the one that continues to be the front leader? Will there be diversification? Will there be further products coming down the line within the crypto space? For example, like the stablecoin arena, which we've seen recently with companies like Circle IPOing, and seeing what's going on with the treasuries and that kind of new crypto-backed side of the technology. I mean, what are your thoughts on that?
Yeah, I mean, listen, IBIT is without a doubt, it's BlackRock's, distribution machine, right? It's pulled the lion's share of flows. I mean, BlackRock just without a doubt has the deepest relationship with advisors, pensions, RAs. And when it comes to ETFs, distribution beats brand awareness. It beats, anything else, right? Which is why BlackRock has grown to what it is today. And liquidity kind of begets liquidity. Once an ETF has momentum, institutions pile in. Tighter spreads, deeper liquidity, lower transaction costs, so that it becomes the default overnight. So for now, yeah, I mean, it's definitely the one, right? But competitors are still going to attract flows, and institutions will start to, as more of these competitors grow and become more akin to an IBIT, they're going to diversify across issuers for the same reasons why you might diversify stocks and whatnot: governance, custody, counterparty reasons. So will there be diversification? Definitely. I actually think that there's going to be a lot of thematic ETFs that start to come about. We're looking at basically, packaging tokenized treasuries in a way into an ETF structure where, you might necessarily have, let's say, a staking yield ETF, which, has a basket of existing DATs focused on, L1 DeFi, type underlyings. And so a lot of things are just starting to really happen, and it's exciting to see how this, takes off.
All right, Anthony, let's go ahead and wrap it up there. Anthony Georgiades, everybody from Innovating Capital. Thank you so much for your thoughts on this whole world of crypto. It's constantly evolving. I can't wait to have you on again in the future. Get your thoughts then, because it seems like it changes every month. So Anthony, thank you so much. Everybody, this has been another great episode of ETF Spotlight. We'll see you again here in the weeks to come.